Embarrassed to be seen on a show about stocks? Embarrassed to be talking about a good stock in a sea of bad stocks? No, I'm talking about Panera Bread. Panera Bread was one of the few bright spots in an absolutely hideous session. A tiny point of green on a blood red tape. Last night, the restaurant chain reported a better-than-expected quarter. That's somewhat unbelievable in itself, right? Beating the street's consensus earnings estimate by 2 cents. Panera's comp store sales grew by 3%, again somewhat amazing, and margins came in around 15%, both higher than expected. Look, we've liked this stock for a long time. It's a horrible market. Can we find something that when the market gets better will start making us a lot of money and won't lose us a lot right now? I want to know if Panera can keep up what we just talked about, or if this is the last good quarter for a while. And I'm talking about more than just the 3 Paneras where I buy the classic with chicken, hold the tomatoes, for my daughter after every big field hockey game, of which there's one on this afternoon, and down 1-0 at the half. All right, anyway, back on July 23rd, I recommended this as a play on lower gas prices, causing more people to go out to eat, and lower wheat and grain prices, reducing Panera's input costs. All right? Market's been bad. The stock's down 13.6% from where I highlighted it. But the cost savings are happening. The company now expects wheat prices to come in at $12 a bushel for the fourth quarter, down from $15 a bushel in the last quarter. And all of its wheat requirements for 2009 are locked in at $9.50. I say hallelujah, man. Another company that saw prices going down. Panera has the cost controls, but can it keep its customers? On the conference call, they pointed out that traffic fell by 3% compared to 5 to 10% fall off for the industry. So does that make Panera worth owning, or is it simply the best house in a bad neighborhood? Can Panera still deliver as we head into a severe recession? We need to do more homework, which is why I am thrilled to bring back on a man who understands the game, Ronald Shake, the chairman and CEO of Panera Bread. Mr. Shake, welcome back to Mad Money.
Hey, Jim. Good to speak to you again.
Absolutely great. Now, look, you did deliver. You said you were going to deliver on the show, and then you go and deliver. Now, here's the issue for me. Is this one of those moments where it really doesn't matter what you do, it's just going to be too hard? Or are there ways to be able to make it so that everyone else is faltering, and you and I both know in the restaurant game a lot of guys are faltering, and you can make your move now into the top 10 restaurant chains in America?
Yeah, well, we're the 14th largest today.
Right.
Jim, let me share with you something. A recession is actually a good thing for a company like Panera. You know, when you start in Panera, we start with a concept that has essentially the highest customer satisfaction in the industry. You add to that a situation where our returns have actually been up in 2008. Few others have that. You got strong cash flow, and you got a balance sheet with no debt. What that means is this is an opportunity. And if you come through and you think about the recession, you think about a year or 2 years from today, what does Panera want to be doing? Well, first, it wants to differentiate. We have an opportunity while everybody else is out there cutting quality, trying to meet the needs of investors and banks. We improve the quality in that time frame.
I was amazed when I went through the quarter. All the lines I like to see from a company: your raw costs down, your labor costs down, your margins up. How are you able to do it when everyone else says that it's going the wrong way?
Well, as you said in your introduction, you've got 2 factors. You've got comps that are up 3.5%. At the same time, you have margins up 130 basis points. We essentially did it by finding ways to offer higher quality food that people are willing to pay a little bit more for.
Well, you used a great example. You said our customers may trade down from a Lexus to a Toyota, but they'll still go to Panera 3 times a month. How do you come up with that calculation?
Well, it's real simple. Look around. Look at all the lists of disposable discretionary items. Oprah's list. We're at the bottom of those lists. We're not at the top. We're talking about a purchase each month that's $30, $35. For most of our consumers, a recession is really a depression if you're out of work. For most of our people, they're not out of work. Their lives haven't changed.
You made a great point in the call also. You said that there are lots of turmoil with developers.
Yes.
And that's an opportunity, too, because what's happened is you have cash. They're not afraid of your balance sheet. There's some places like Bennigan's they were afraid. Sure. Are you getting the offers that you've been waiting for to be able to build new Paneras?
Well, you know, the market is in transition. Certainly, we're seeing some weakening in the commercial real estate market. Right. On the other hand, a number of developers are pulling back on their projects. There's countervailing forces. But ultimately, this recession is good for strong companies like Panera. We'll come out of it stronger. We'll differentiate, we'll develop, and it's also an opportunity to attract strong people to our company.
Right. I was thrilled on your call. Someone said, are you going to do a buyback? And you said, wait a second. Right. We got a great balance sheet. We got to grow. A lot of our viewers say, well, Jim, you always emphasize dividends. I emphasize dividends when I think a company doesn't have growth. You don't need to buy back stock here, do you?
No, well, Jim, it's something our board looks at every quarter.
Right.
But very, very specifically, we think a conservative balance sheet is a strength in times like this.
Absolutely. You said something on the call, though, that I was concerned. There is one issue that I was not sure about, which is you have a lot of franchises. Now, I read in the paper that it's very difficult to get a loan to buy a franchise. How is that affecting you?
Well, actually, we don't have a lot. We have 35 different franchisees that represent 700 cafes. In essence, these are middle-sized businesses, $50 to $100 million, that have strong cash flow in their own right, strong abilities to borrow, and often very strong lines of credit. So we really are minimally at the effect of the financing issues relative to franchising.
You were really ready for this, weren't you?
We're ready for it. We've been working on this for a year. In fact, let me tell you something, Jim. We have targeted guidance for the fourth quarter of up 50% in EPS. That's the midpoint of our range for the fourth quarter, and we fully intend to hit it.
Excellent. Ronald Shake, Panera Bread Chairman and CEO. You are the man. Thank you so much for delivering.
Thank you, man.
Thank you. Good to talk to you.
Be good.
Guys, listen, no one's delivering other than McDonald's and Panera. You want the good, solid dividend and good growth, Jim Skinner and McDonald's. You want a little great growth, something fast that is going to win when the smoke clears, and is winning now. It's Panera. And by the way, yeah, I eat there. I love it. After the break, I'll try to make you more money.